Well, another great day comes to an end, right? Hope you guys had a fantastic Tuesday, but it's back to work tonight, getting ready for Wednesday's trading session. We have a lot of great trades setting up for what might be a very wacky Wednesday tomorrow morning in our trade room. We're going to cover all my favorite trades in tonight's video that we've got a game plan to make some money tomorrow. Before we jump in and talk about all the great trades setting up for Wednesday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And as always, if you guys enjoyed the video tonight, do me a favor, will you hit that like button? I appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get ready for Wednesday. Where are the best trades setting up for the middle of the week? Boy, oh boy, a lot of ranges on these charts here this week. We have multiple ranges right now. Look at that. 2 ranges on the Nasdaq, 2 ranges on the S&P. Anytime we see multiple ranges like this, we know tomorrow will likely bring a lot of volatility for us. We're trading rotation back and forth. We're trading breakouts out of this big range. And also, too, we're trading head fakes, right? Fake out breakouts. Lots of ways to make money both on the short side and the long side on the Nasdaq and the S&P for tomorrow. We're going to talk about that here more as we go into it. And then, boy, oh boy, get a range, a nasty range there on the crude oil. Oil has Hurricane Ian, right? Supposed to be hitting landfall in Florida at some point overnight and tomorrow morning. So anything is possible on oil. That range right there, would love to buy some lows, sell some highs. Definitely have my eyes on some breakouts though on crude oil because of that hurricane coming later on this week. So oil might surprise us here at some point here tomorrow. Not to worry, I'm going to cover my favorite trades on crude oil, S&P, and NASDAQ. Now, speaking of tomorrow though, let's not forget, we're going into the end of the month, end of the quarter. Tomorrow, of course, is a Wednesday. So Wednesday, last full week of the month, last full week of the third quarter. I talked about this last night. We will probably start seeing an uptick in volatility over the next couple of days here. So be aware of that. And with those 2 ranges on the Nasdaq and the S&P and that hurricane coming for oil, I wouldn't be surprised if we start seeing a real big uptick in volatility starting here overnight. Looking at the news here for tomorrow, not a lot of major news for us to worry about. We pretty much have just a bunch of minor stuff. I wouldn't worry too much about the international trade number. We got Powell back tomorrow. That's probably the big news of the day tomorrow from Jerome Powell. Like I mentioned last night, I don't expect Powell to really shake things up too much, but you do have to be aware that anytime the head of the Fed speaks, the markets will likely listen. So we may get a bit of a pause around 10 o'clock to 10:30 tomorrow. So, as I always say, trading is like riding a bicycle. If it's not moving very well, back off a little bit. We'll wait for him to come and go, let the markets figure out what they want to do, and we'll trade before and after. You'll notice, too, we have a lot of Fed speakers here this week, right? Tomorrow is no different. We got Bostic, we got Bullard, we got Bowman speaking. So definitely a peppering of Fed announcements, Fed speakers tomorrow. And so those could definitely be some catalysts that may really increase the volatility that we're already expecting. We know though, the big news for tomorrow will be Jerome Powell. We get some small stuff there out of the petroleum status report. That Hurricane Ian scheduled to hit landfall at some point tomorrow morning in Florida is a lot more important than that petroleum status report. So that will be the big news affecting oil for tomorrow. Jay Powell coming in at 10:15. Will we hear any more updates regarding Hurricane Ian? Will any of these Fed speakers really kick these markets into breakout mode? Those are things we're watching when we get together tomorrow morning in our trade room. And again, as we go deeper into this week, we do expect more volatility to pick up as we go into the end of the month and the end of the quarter. Back to our charts though here, guys. Now, I'm going to cover my favorite trades on each one of these charts here tonight. Make sure you watch all the way to the end because you'll learn something new, different trade ideas, different strategies throughout the entire lesson tonight. So take some notes, grab some screenshots, and I try to spin it all together and save the best stuff towards the end, so I'll give you reason to stick around all the way to the finish. Why don't we grab the NASDAQ first? We'll go NASDAQ We'll go S&P, and of course, we'll finish up on the oil here tonight. Real quickly here, first of all, on the NASDAQ, this is a 4,000 tick chart, right? All the time frames you can see in the upper left-hand corner here. Now, of course, this is the NASDAQ. It could be the micro NASDAQ. It could be the QQQs. A lot of our students right now making money on the micro NASDAQs, the QQQs, or any of the other ETF counterparts. Also be aware, too, the NASDAQ and the S&P are very, very similar. So what I talk about on the NASDAQ can pretty much be applied to the S&P and vice versa. So I'll try my best tonight not to repeat myself too badly as we go back and forth on these two markets. There are 4 key insights that are giving me a tip-off of where the best trades are going to be here for tomorrow. The first insight, of course, is the long-term bear bias. We know right now the bears have all the chips. The bears have control. Look at a daily chart. Look at a 4-hour chart. Look at a 60-minute chart. You'll easily see the bears are well in control of this bias. What that means is I'd be very careful about being a buyer. I really have to pick my spots wisely, and I'll talk about that here tonight as we go deeper into this video. The second key insight is the strong moves down for the bears. Now, we talk about these quite a bit on this video. Anytime we see a strong move in one direction, we expect to get a pullback and a retest of that low. That's one of them trying to retest right now. We also have to go all the way back, right, to last Friday. That was that big move down. They still have not retested that 12,229 low. So you got to think the bears right now would love to take out some of these lows here. The third insight here are 2 trading ranges, and I do think that is the most important clue on the chart tonight. We have 2 ranges, one at the top, one at the bottom, and what you want to understand about multiple range environments is the price will want to rotate back and forth between the two until we see a breakout. So we go up, we go down, we go up, we go down, right? Imagine they're going to want to fill in all this area in between these 2 ranges. Now, of course, with that said, we're anticipating right now those buyers to want to rotate back higher. Once we get up to the top of the range now, we look for bears to come in and sell it back down. We go back to the low of the range. We look for buyers to come in and buy it back up. At the same time, though, because this momentum now becomes so strong as it runs higher, it's easy to think the buyers may get a gift and be able to break this thing out and break out going higher, or possibly, let's say we go higher and come back down, the bears would love to get a breakout from there. So think of this as one big trading range, and the market's going to want to rotate back and forth like this, right? We'll take some nibbles, buying low, selling high, and then waiting for possibly breakouts if we can get some proof, and we'll talk about those breakouts here tonight. And then, of course, the fourth one is major support below. Now, this is going to be a little bit different than the S&P. The S&P will be quite different than this. It's one of the only differences between the NASDAQ and the S&P tonight. But you'll notice right now, if we go a little bit lower here, we have quite a bit of support down there below that trading range. The reason why that's important is because if we do get a breakout, might not be as easy as these bears would like it to be as they try to punch back up into that trading range. So got to be careful with a bear breakout on the NASDAQ. You'll notice, though, on the S&P, the S&P has a lot more wide open space for us to work with. So these are the 4 key insights right now. Knowing this information, how do we make money on this? Where's the best way to make some money? What I'll do tonight is we'll talk about as the market goes higher, how I can make money on that way. I'll also talk about how the market goes lower, how we can buy off that low, or of course sell that breakout. Right now the buyers are going to want to rotate back up towards these highs here. There are really many ways in which we can make money as the market goes higher. As it's going higher here, the key is going to be looking for trap entries. Trap entries are going to be your best bet right now to make money as the market goes higher, because the one thing the buyers have to worry about right now is they're not going to want to buy very high, right? Because as soon as we get back up around these highs here, you have to expect more bears are going to be coming in because of that long-term bear bias right now. So as we go higher, the best way to make money going higher here be finding traps. Now, one of my favorite techniques is to draw a trend line off some of these highs, bring it off that low, and then look to get just below a prior swing, right? That's, of course, where traps come from, right below a prior swing. So watch as it goes higher, strong move up, shallow pullback, higher high in price, and keep an eye out for some traps as we're going higher. I like that idea as we go hunting for a retest of that high. Now, once we get up around those highs, now we have to think about, okay, now the bears will likely start coming back in again, and now we start looking for those shorts off the high here, or potentially we look for breakouts going higher. Let's talk about how to get the short going, and then we'll talk about some breakouts as we go deeper. As we go higher here, we have a very similar game plan we talked about just 24 hours ago in last night's video newsletter. Here are the two ways I'm looking to short this thing at resistance above this big range. One of them is called a crown reversal, and that is with the buyers coming in now, let the buyers try a couple times. Remember, we're now at major resistance with a range below us. Ranges act like magnets, guys. So once the market breaks going higher, we can now look to trap in some of these buyers and basically think about it, right? When they come in and try a couple times to buy right into those highs, where are their stops? Think about where their stops are, and we can use their stops basically as fuel to go back down into that trading range. Now remember, whenever we see a strong move higher like this, we have to anticipate the buyers are going to want to retest, right? Because anytime we see a strong move in one direction, we have to respect that retest. So let those buyers try once, let them try twice, and my favorite entry before the retest is going to be that trap setup. This time, the bull trap for that short going back down where? Back to the other side of that trading range. Let the buyers try once, let them try twice, grab that trap for that crown reversal. That's one of my favorite ways to sell off the high. Here, another one will be as we go higher here, let's say now the buyers do come back and they do retest that high. Now we have mission accomplished. Anytime we see a strong run higher, we expect buyers to want to retest it. Once they retest that high now all the professionals are taking their profit now, and now we can rope in some of the inexperienced traders and again use their stops as fuel for the move going lower. Let them try once, let them try twice, and then once those buyers commit, once we see where their stops are, once we know where their pain is, right? That's the key to this. Once we trap in those buyers, we have them right where we want them, and we can look for what I call a two-try failure pattern, right? In other words, buyers once, buyers twice. Remember, into resistance, buyers have already retested that high now, mission accomplished. Think about that nice juicy signal candle, and they can short this thing going back down into the other side of that trading range. Now remember, this is where the fun starts, guys. Now we can go out, we can draw a new channel off the low, mark the channel off the high, and then repeat after me. First test is the best test off the high of that channel. Now, I'm going to keep it pretty simple here tonight, but this could be any of the entry patterns we teach in the free trading course, right? Things like traps, things like failures, things like pullback combinations, strength moves as the market drops off that high. So I really, really like that variation of the short, right? So strong pop up, let them retest, trap in some of those weekend buyers, right? Use their stops for fuel as the move goes lower. Find that new channel going off that low. And then again, trap, failure, pullback, all the same entry patterns that we teach, of course, in that free course, in that free trading class. Which reminds me, I know that most of you guys watching this video right now, you've already taken the free classes, you've learned all the setups, you're making money with them on your own account. I always appreciate you guys sending me screenshots and emails every day about how much money you're making with this. But listen, if you're here for the first time today, if you haven't taken the free course yet, if you haven't learned all the setups and where to use them to make money, what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link and take the free trading class, because the strategy I teach in that free course will get get you into far more winning trades, help you easily avoid losses, and most importantly, it'll give you confidence because you'll have a game plan to follow every day. If you're missing the best trades each day or you're taking too many losses, take that free course. It's perfect for someone trying to make the transition, the jump into full-time trading. Most importantly, though, you'll know exactly where the best money-making trades are going to be and the same stuff we use every day in our trade room. That way, once you learn that strategy, you'll know what a double top to try failure into that new channel and that short back down again, right? So you'll definitely love that. And let me know how you do with it. Send me an email. Let me know how you're making money with it. I always get so inspired by you guys making money with the free stuff on our website. Now, last but not least, as we go higher here, how do we buy it, right? How do we buy it as it's going higher? Well, there are 4 different breakout patterns we can look for as we go higher. I'm going to cover one of them now, and I'll give you a few more as we go deeper into this video here tonight, so make sure you watch all the way to the end. First one's first, let's talk about going higher here right now. The buyers come in, right? Let's say we do end up going higher here. The buyers come in now, and they don't go 1, 2, trap and fail, right? They don't double top and then collapse back down. Now they pull back and they jump and they blast off that moving average. Now remember, we're not going to buy, right? We're not going to buy into these highs. A lot of times we'll see markets go higher. They'll try to break out, but they fail and we collapse back down into that trading range. So we want to see a strong run up. I want to see the pullback to the moving average, the 21 EMA, and I want to see buyers come in and really jump and really launch off that moving average. You got to remember, it's an overall bear market right now, so we really got to be careful, like I said, buying especially a breakout at the top of basically one big weekly trading range right now. However, again, a lot of things happening right now. This could easily change. 1, 2, 3 breakout. At that point now, if I can get a good punch breaking through those big highs up there, now it's a breakout. Now we trade this as a bull trend. I mark off a trend line off the high. I find that channel off the low. And then as always, I like to drill down, find some prior swings. My favorite trade is always to get underneath a prior swing. That's where traps live. Get under the moving average. That's where failure patterns live. Get back above the moving average. That's where pullback combinations will show up. Plenty of ways to make money off the low of that channel. Trap pattern below prior swings. Failures as the bears get short off the moving average. And again, that pullback combination. You'll learn more about that stuff in that free trading course. One thing you want to think about here as we go higher with any breakout pattern is the size of the first leg is almost always the size of the third leg, right? So first leg and then third leg, that will give you some fine-tune exits there to help you squeeze out the most amount of profit from that move going higher. If the buyers get what they want tomorrow, they'll easily take out this 11,685, 11,778, and you'll see some major levels overhead on the S&P here in a moment. So that is one of our 4 breakout patterns going higher here. I'm going to cover a few more of those as we go deeper into this video here tonight. The next question now is what happens if we go lower, right? Because now we have a lot of support down here, right? It's a big range here. Can I buy it down here? We definitely can. Can I sell it as they break out lower? Absolutely. Let's talk about the breakouts. Let's talk about the head fakes, and we'll do that right now on the S&P. Over on the E-mini right now, and again, you'll notice 10,000 tick chart in the upper left-hand corner. It's the basis, same exact chart, right? We have an overall bear bias. We have 2 trading ranges, one above, one below. We have to think the market's going to want to rotate back and forth between these 2 trading ranges. And the one big difference about the S&P compared to the Nasdaq, or the SPY compared to the QQQs, is we do have a lot more open space below us on the S&P, the SPY, or the micro S&P. So be aware of that. It does, look like the S&P has quite a bit more opportunity here for a breakout going lower. So First of all, we talked about the move going higher, and we talked about that 1, 2, 3 breakout pattern, right? We talked about that thing going higher here. Here's a few more I want you to keep in mind as we try to go higher. We talked about that pop up. We talked about that pullback and that blast, right? And how I can mark up that channel and I can use the low of that channel, right? It's a very, very common, we call these 1, 2, 3 breakouts. Again, we're not going to buy the first one because a lot of times they'll get pulled back into that trading range. So don't fall for that trap at the high, okay? Now, next one is, let's say we get a real strong run higher, and then let's say the market begins to grind, right? Let's say we pop up and we start to grind going higher here, right? This is another very common breakout pattern. Now, this one doesn't seem as likely right now, but again, we live in a crazy world right now. Anything is possible, especially with the end of the month, end of the quarter here. If we see a strong pop and they begin to grind and go higher, right? It's different than the 1, 2, 3 breakout pattern, which is very easy to spot. These ones can be a lot more difficult. What you'll do is draw a trend line off those highs, bring it down to that low, and see what I'm doing here? I'm drawing the channel backwards off the high, and then we go out and we start looking for prior swings, right? Mark those swings, mark those swings. Again, my favorite trade on these, whenever I see a really strong move with a pop and grind like that, is get underneath some prior swings. That's where traps live. Get underneath the 21 moving average. See if we can trap in some bears trying to sell short, and see if we can use their stop losses for a retest of that high, right? Target will back up to retest the high. Now, it's very likely that if we were to get a strong breakout going higher like this, it's very likely we see some buy setups on the way back up to retest the high. And then from there, let's say we do get that pop, that grind, we get that channel, they pull it back and they retest. And then what do you think? Is it possible now we come in and trap in some more buyers? 1, 2, use their stops as fuel for that 2 try failure back down. And again, find that trend line, find that channel, grab that first test off the high. That's very, very likely at some point, or very, very possible if we can get enough strength going higher here. That's going to be the key. Remember, we got to pick our spots really wisely to be a buyer right now. It has to be a very strong run higher to justify buying that pullback. Pop and grind, 1, 2, 3 breakout. And then again, once we do retest the high here, think about now more bears coming in because that long-term bear bias. Trap them in, let those buyers try once, let those buyers try twice. We'll get that short, that 2 try failure, and then traps, failures, pullbacks off of that high. I really, really like that potential sequence for tomorrow as well, if something was to surprise us and really blast this thing going higher. Okay, let's get to the good stuff now. Now, what if we go lower? What if we go lower? Can I buy it back up again? We definitely can, right? We definitely can. We're basically in one big trading range right now. Ranges are magnets. As we try to go lower, we can definitely buy this thing right back up into that trading range. The most important thing, though, right now is to keep looking for those crown reversals. Again, be very selective with your buy-side trades here. I don't care where you are. It's a very heavy, very bear market right now. So as we go lower here, think about those. Think about that crown reversal where we let the bears try once, higher high, try twice, and I really do want that trap. I really do want that trap. That trap is really going to be important because, again, as the market goes higher right now, there's more bears coming in. So you really want to take out that low. You'll notice I have what's called a pendulum swing. The amount we go above the range is now the amount we go below the range. That area is a key area of support for me tomorrow. If we can take out that low, if I can get some bears to get trapped in, let them try once, let them try twice. I definitely do like that crown reversal off of that low. Remember, bears try once, bears try twice at a higher high, right? Higher high for those bears, and then grab that trap off that low. That'll keep you out of trouble. And of course, you'll learn more about the signals we used on that inside that free trading course. If we can get that crown reversal, where's the target going to be? It's definitely back up to retest some of these highs overhead, and of course, leave that runner for that big move, potentially all the way back up into that trading range overhead there. Okay, why do we short this thing now, though? Now we know how to buy it as we're going higher, right? How do we short this thing going lower here? Or sorry, buy it as we go lower, right? How do we short this thing now? The key will be waiting for one of those breakout patterns. And we've talked about two of them so far. Let's cover some more here right now. We've talked about the 1, 2, 3, right? We talked about take out that low, hold on to that pullback, and really blast, right, and run lower. We call these 1, 2, 3 breakouts. I'm going to mark off that low. I'm going to find that channel high. I'm going to look for those traps and short that first test, right? That's one breakout. We talked about, remember, first leg, third leg. That's going to give you a good easy way to fine tune those exits to squeeze out some more profit. Another one, right, is that pop and grind, right? If it pops down and begins to grind down, these are very easy. Mark a trend line off that low, bring it up around that high, look left again, try to get up above some prior swings. That's where traps live. Get above the 21 moving average. Hopefully buyers will come in and foolishly try to buy that pullback. If they do, we can use their stop losses as fuel for that run going lower. Again, first leg, third leg, that will give you a good idea of where that target will be as we go lower. We have quite a bit of open space here on the S&P down to that 35-60 area waiting below here. So quite an open space there. One more, how about two more here as we go lower? Let's say the market now takes off the downside. Real strong move. Shallow pullback in price. Lower low. Traps, baby. We call these two-try traps. This is the same exact pattern, by the way, if we go higher, right? We go higher, strong move up, shallow pullback, higher high in price. That trap is a pretty good trade going long. We talked about that a few minutes ago on the Nasdaq chart. That was the first time. That was the first pattern that we talked about here this evening. So think about this. If it really takes off the downside, right? A lot of stuff going on right now. If the markets get spooked and we jam to the downside, strong move, shallow pullback, barely comes back to the moving average, lower low in price. Traps, baby. We call these two-try traps or two-try breakouts. That is a third breakout pattern. I wouldn't recommend this one going higher above the highs of the range, right? Like up here, right? It would really have to be a very, very strong move. The ones I talked about earlier are the ones you want to focus on as we go higher. And then the fourth one here. The fourth one is a big, big move lower. So let's say, for example, overnight, and again, this also applies to NASDAQ as well. Let's say, for example, something happens overnight, everybody freaks out, and the market simply collapses, right, overnight here. There'll be a big gap in the chart, right? It'll be buried down here by the time you get back to your desk tomorrow morning. If we see a really, really big move down, the first thing you should be thinking is don't chase it and don't try picking a bottom. Okay, there are kind of three things we always talk about in our trade room whenever we see a big move overnight. The first one is don't chase it, right? Don't chase it, because what's going to happen is it's going to be seen as being too low to sell. The next thing is don't pick bottoms. There's a reason why it's doing that, right? Don't try to pick a bottom on this. It probably hasn't gone too far. All right, I made that mistake a lot when I was a new trader, thinking I would pick some bottom here, and the problem is it keeps on grinding down. You're getting nickeled and dimed the whole entire time as it's going lower. So don't chase it, and don't try to pick a bottom and get that reversal. It's very difficult to pick bottoms in those really big moves. The last thing is to wait for a deep pullback. Right? Why a deep pullback? Because if we get that big move down overnight, and again, there'll be a gap in the chart, it'll be a big monster move down overnight. You'll know it when you see it. It'll be seen as being too low to sell, right? So it'll be too low to sell down here. I have to wait for a much deeper pullback here to attract in more bears into the market. What I'll do in this situation is I'll go out and look for a bigger channel, right? I'll mark up like off that low, right? Up off that high. I'll find a bigger channel. And then what I'll do is I'll wait for the market to pull back. Now the key is you want to get a good amount above the moving average on this, and it will usually begin to feel like the market now is about to reverse. In fact, I always tell my students in the trade room, whenever we see a really, really big move overnight, and I tell them we're waiting for a deep pullback, Of course, the question is how deep, right? How deep? Well, again, find a bigger channel. But more importantly is that once this price begins to accelerate, once it feels like, oh my goodness, this could be a reversal going back in, that's usually right when it's about the right time to look for that short back down. So big move, big breakout going lower. Again, something happens overnight, markets get spooked. This could easily happen in the NASDAQ as well. I'm just simply showing it on the S&P right now. Don't chase it. Don't sell low. Don't try to pick that bottom because it can keep on grinding down as long as it wants, right? It hasn't gone too far. The market has its own rules, right? We don't decide how far this thing goes here. And of course, wait for that deep pullback. And the key will be is that once it starts to feel like, I always say, once that little voice in your head starts saying, oh my goodness, this could be the reversal right here, that's right about where it's time to trap in some buyers and short back down to that low. The moving average is your best friend in this situation because once those buyers pull back and they try to buy this thing going back up into that range above, remember, anytime we see a strong move in one direction, there's one thing on our mind, that is to retest that level. Once those buyers commit, we know exactly where their stops are and we can sell into those stops for a move back down to retest the low. So again, a really big breakout. Don't chase it. Don't trade against it, not if you want to make the easier money. Wait for the deep pullback, find a bigger channel. And again, how deep? Right when that little voice in your head says, oh my goodness, maybe it's a reversal. That's usually when it's deep enough. Trapping those buyers. Use their stop losses, right? Because when the buyers are caught long and they get stopped out, everybody becomes a seller and the market will gravitate or just collapse back down to retest the low. So keep an eye out for that big move, that deep pullback, trapping those buyers. The easiest money you're ever going to make in these markets is when you're trapping traders on the wrong side of those very strong moves. So now we've covered the NASDAQ and the S&P, both if we go higher and of course, if we go lower. We've got pretty much everything nailed down there now. I'm sure I missed probably a couple things here on the charts, but I'll make sure we cover all the bases tomorrow morning again in our morning trade room. Let's wrap it up tonight on the crude oil. We've got three basic insights, three key insights right now on the oil futures. And again, this could be the USO, it could be the micro crude oil. You can apply this chart to pretty much any variation or any component of the oil futures. First of all, overall bear bias, right? We definitely have an overall bear bias right now. Again, that means we really have to pick our spots wisely to be a buyer. We should not be trying to buy things right now on any of these markets as they go higher, right? So once we get back up to big highs, that's not where we want to be buying. We want to be buying as low as we possibly can. The second clue here is a range with rotation off the high. We pop up. It's basically a bull range, right? It's a bullish market into a range. We pop up, and now you'll notice, right, the bears are trying to rotate back down and take out that low. Ranges love to rotate. The amount we go above the range is oftentimes equal to the amount we go below the range. Ranges, just like on the S&P and the NASDAQ, love to rotate back and forth, back and forth. We buy low, we sell high, and we wait for a breakout. And what might be the most interesting part about this chart today is we have a hurricane coming, supposedly going to hit landfall at some point overnight and into tomorrow morning. And of course, like I mentioned last night, I really hope everybody stays safe out there if you're in that eye of the storm right now. I realize if you live in Florida, this is part of the game, right? We have earthquakes here in California. You guys, right, have hurricanes. So I realize it takes a very big radar scare to get you guys scared, right? But please be safe out there, and hopefully everybody gets a good rinse it off, right, and survive this thing. But with that hurricane, where I'm going with this is this does not look like a hurricane chart right now. It's very, very clear by looking at this chart right now. Normally, under normal conditions, when you hear anything about a hurricane and you see how big that storm is and the path it's hitting, you would think by now oil would be right back at 85, right? Maybe $90 a barrel right now because of the perceived, hit on supply for oil, right? Big shipping, big delivery area in that part of the country. So the fact that we're not seeing this really is I think right now it's what we're not getting is one of the biggest clues here on crude oil. This really goes right along along with what I said earlier, we really have to be careful being a buyer on these markets right now, because you can clearly see there's a hurricane, not this chart. If somebody showed me this chart and said, what do you think? I would say, you wouldn't think there was a hurricane coming, right? Which either means the markets know more than the Weather Channel does, or the bears really, really, really have their hooks in this market right now, and there's a whole lot of bears here that are unable to get this thing going higher right now, even with that big hurricane coming here into tomorrow morning. So knowing that, you really got to be careful being a buyer on this. It does not look like, and again, keep in mind, we may hear more news about Hurricane Ian overnight, and that may really spark things here for tomorrow. But right now, though, it looks like we're still very, very bearish on this chart right now. So knowing those three components right now, how do we make money on this? Well, really a lot of this is going to be very similar things we talked about here already on the S&P and the Nasdaq. We have that trading range. We're expecting this market now to want to rotate back down again. Buyers, of course, can buy off that low with a crown reversal. Very, very specific and reliable buy pattern. And also, too, the sellers, they could break out and go lower, right? It does seem a bit crazy to have a breakout going lower during a hurricane week, but hey, that's the possibility as we go lower. So as we go lower, buyers can buy low. As we go lower, sellers, of course, can sell that breakout going lower. As we go higher here right now, again, this is where we have to be careful with those long trades, right? So as we go higher, bears are going to want to come in. We have a lot of overhead resistance up overhead. So as we go higher here, you got to think more bears are waiting up there to short off that high. And if we do get a breakout, we'll really have to wait for proof of that breakout, which I talked about a couple of them here so far. So let's talk about this right now. As we go higher here, crown reversal, right off the high. Buyers try once, buyers try twice, trap in those buyers. Remember, this is before the retest. Anytime we see a strong move, we expect a retest of that high. So make sure we wait for those buyers to try a couple times. And then once we get that nice good signal, we can short the sucker back down into that trading range. Crown reversal. The next one, of course, is the one that probably is a little more reliable. As we go higher here, the buyers pull back. They retest that high. Mission accomplished now. Right? So now we have that retest, and now all the weekends come in. They try once, they try twice. Remember, lower low in price, and then we get that nice strong signal candle for that short going back down again. We find that new channel by drawing off the low. We mark off that high, and again, as I always say, first test is the best test with that short off the high. That's a two-try failure, right? Basically a double top reversal into a trap, a failure, a pullback setup, all the same entry patterns we talk about in the free video classes, which I know most of you guys have taken, right? So those are a couple options here to short this thing as we go. We really got to be careful again with the breakouts going higher. So if they do take out that high right now, if they can hold that pullback and really get a good jump going higher, right? We call these 1, 2, 3 breakouts, right? This will be a reversal as well. Then we can trust that first pullback. We find that channel off the high, we mark it off at that low, we draw down or drill down to our faster time frames, find those prior swings, and we grab that first test off of that low, right? Could be a trap, failure, pullback, strength trade as it jumps up off of that channel low. And again, don't forget, they might retest that high. The buyers may come in now and fail off that high, 1, 2, and we're dropping it right back down again. That's why I said earlier, make sure you're aware, right? If we do get that strong breakout higher, there probably is money to make on the pullback, but be very careful about pushing it through that high here because, again, we are so overall bearish. Another one would be the pop and grind. We pop up, right? We start to grind and grind and grind going higher, right? Strong pop, strong grind going higher, easy one. Find that channel high, bring it down off that low, and again, we're marking up some prior swings, and we're grabbing that retest off that low, right? Grabbing that first test is the best test off the low of that channel. Take that profit at the high, and then look for that short 1, 2, back down. We go from there, right? We're going to keep an eye on that here tomorrow as we go higher here. As we go lower, going lower here, we again have a big old range here right now. It's very similar that we saw on the S&P and the Nasdaq, you can see here, we have basically one big range, right? Big magnet right in the middle of that trading range. So again, I can buy off that low, but you really got to be careful right now because again, if this is what the chart looks like with a hurricane, what is it going to look like if that hurricane, is behind us, right, later on this week here? So if from right now, from what we know right now, and again, anything can change overnight here, but we know right now, though, is going to be careful being a buyer off these lows. We take out that low. This is exactly where that crown reversal comes in, right? We get the 1, we get the 2, get that trap, right, and back up into that trading range. Or we get that strong run lower. The bears come in, they try to retest that low. They do retest the low, and then same thing, right? Bears once, bears twice, that trap low. Remember, these are buy-side trades now. We really have to be careful and selective with which ones we take going long, right? So they really do take out that low, and they pull back and double bottom off it. I can't get that much more aggressive with this because, again, we are so bearish overall. Let them try twice, trap in those, right? Trap in those sellers, and use their stops as fuel with that 2-try failure or that crown reversal, as I like to call it. And then don't forget, there'll probably a trend line coming down overhead here, so be careful chasing that market as it goes higher, right? Just be careful with that trend line. If you miss the entry, right, don't chase it. Again, we're still pretty bearish here overall, so we don't want to buy it as it's going higher. If we do take out that low now, watch out for them now to hold that pullback and really blast, right? Those 1, 2, 3 breakouts. We have a ton of open space here, really down to 71.29 here for the bears. We have a lot of open space here right now. So if they do take out that low, if they can hold that pullback and really blast off that moving average, right? Take out the pendulum swing, take out those lows. If we really see that 1, 2 real strong blast going lower, that, my friends, is a breakout. We'll mark off that low, find that channel high, drill down to find those traps, get above those prior swings, because that's where traps live, get above the moving average. That's where the best buyer failures will live. You'll see a lot of examples of those inside that free trading course. Remember, breakouts, very, very strong to that low here. And the last one here would be that pop and grind, right? That pop down, that grind down, right? They take out those lows, but they keep on grinding down. It's already a bear market. We're going to mark off that low, find that bigger channel coming in off that high, find those prior swings, and again, grab that short, right? That trap, that failure, that pullback. I'm obviously just going to draw on the screen right now. You'll learn the rules and what they look like on real charts, right, in that free video course that I mentioned earlier. All right, guys, $75 a barrel is an easy magnet there for the bears. Just remember, though, anytime we see a pop and a grind, right, the goal is to go back and retest that low, right? So we get up, trap in the buyers, right, and back down to retest the low. Rinse and repeat. Strong move, wait for the pullback, short the top of that channel, back down to retest the low, and then possibly from there, that 1, 2 crown reversal, and back up we go from there. As you can see, the game plan is pretty simple, pretty basic when you have these trading ranges. The S&P and the Nasdaq have 2 ranges, so look out for that big volatility back and forth here. I will definitely be listening in for more headlines about Hurricane Ian. That is definitely the big kind of known unknown as we go into oil tomorrow. But again, like I mentioned earlier, either this chart knows something we don't know about the hurricane, or there must be a lot of bears in oil right now because usually hurricanes will have this thing spiking higher. All right, guys, good job tonight. We're ready here for tomorrow. Back to work tomorrow morning, 8 o'clock Eastern time in our trade room. The game plan is ready. If you're looking for a great place to come out and learn and trade along, you're going to love my trade room. We open up every morning, 8 o'clock Eastern time. I'll put all the membership links. I'll put all the free course links. I'll put everything you need in the description of the YouTube video. So grab those links and get registered. Don't be afraid to call the office. I'm always here. If you guys have any questions, don't be afraid to give me a ring here in the office. And we always have live chat going. So if you guys have any questions, that's probably the easiest way to get us right there is to grab that live chat chat and hit me up on the live chat server as well. Guys, I'm going to run here for now before I lose my voice here tonight. I will see you guys tomorrow morning, 8 o'clock Eastern time in our trade room. If not tomorrow morning, we'll see you guys back here same time, same place tomorrow night. Thank you so much for tuning in. Make sure you subscribe, hit that like button if you guys enjoyed the video tonight, and get some rest. I'll see you guys tomorrow morning. If not, same time, same place tomorrow night. Be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.